All right. So just quick as a first one, I just love to know where's everyone actually joining from. I suppose this afternoon for me, but I know often we do have people from around the world. Where are you actually joining from today? Sydney, fantastic. Brisbane, Melbourne, fantastic. Central Coast, Bangkok, brilliant. Sydney, a lot of locals today. One Thailand. Anyone from Singapore or from other countries? Hong Kong, brilliant. All right, USA. What time must it be in the USA right now? Someone's put in the chat. Or are you starting with a question? KL in Malaysia. Fantastic. All right, another Hong Kong, Croatia. It must be incredibly early right now in Croatia. All right, brilliant. All right, well, I'll kick things off. So look, today, I obviously did a session last week, and today I'm really going to be diving a lot deeper into a few of the elements that I sort of cover with that. And I'll just give the context for this, why I'm doing it. I'll go through the contents and all that sort of stuff. In January this year, I did an investor survey, and it was one of the most insightful surveys that I've ever done when it comes to understanding private markets and how investors engage with opportunities. And I did it for a reason, because one of the things I get so frustrated about this space is there's just so much misinformation about the relationship between a founder or even a fund manager and an opportunity. And I've talked about this online. I've talked about it in so many different areas, and every single founder gets taught about, hey, go and create your pitch deck, and it gets positioned like it's this amazing document that just changes the world for you. And really, the pitch deck just ends up being a very, very small part of the process. So this session is really designed to give you a far deeper layer of insights about what investors are actually looking for in opportunities, and I'm breaking down every single part that we covered with this. So just know that this session is going to be very data heavy. Um, and the second part, I'll note that I'm actually going to be giving a bit of a demonstration of our upcoming agent that we're sort of in testing mode of at the moment. And I know we've already been using it with some clients and some of our sort of companies onboarding as part of our sort of Capital HQ second birthday. And they're absolutely blown away with some of the outputs that are coming from it. And the best thing I can say is one of the biggest challenges for me has always been about how do I replicate me? And this is the first time that I've been able to do this in such a way that it's actually transformational from an output perspective. So I can't wait to show you that. So yeah, just know it's going to be data heavy. So there's two questions people always ask. Will I be sharing this video and will I be sharing the slides? The answer is yes and yes. So I will be sharing both the slides from this session and also the video as well. So I'll make sure to cover that for you. All right. So let's get into it. Okay. So the first one is just all the different things we're going to be covering, as part of it. I'm going to be, I said, it's going to be very data heavy as far as what we learned from investors. Now, the key thing to know when I go through this data, it's not so much, I typically when people do a lens, they always try and, I suppose, navigate the relevance of it for themselves and how it relates to their opportunity. What I want you to more think about is how you position your opportunity when you understand this information, right? And because it does make a difference, because the idea is like, how do we make our opportunity as relevant for the most amount of relevant people for our opportunity? Because ultimately, this game of capital raising is a game of thesis. You have a business thesis about what you're building, and they have an investment thesis about what they want to invest into, right? So these are the key things that I want to be covering as part of this. All right, so why am I doing this? As mentioned, every single founder I meet, every time I do, keynotes and, talks at different other people's events and for accelerators and all that sort of stuff, it's always about the pitch. The investors really highlighted to us something much deeper than that. And it's really important that I cover it for everyone. And also, it's most important for me that I take you into the mind of investors, because for us, this next 90 minutes is really about you diving into the minds of investors, because I know for the rest of the time you're going to be diving into your own mind, thinking about what, all the different things you've got to deal with. And I always articulate that as a founder, you're playing 4D chess, right, across 7 different chess boards. You've got fires you've got to pull out, you've got to put out at the same time. And you've got 30 different people screaming for your attention. And that basically summarizes your life, right? But in this 90 minutes, it's really about thinking from an investor's perspective. And that's my hope to really get across with this session. So, as I mentioned, it's not a pitch problem. This whole capital raising game, especially if you're, engaging from high net worths and family offices and even investment groups, it's more of a communication infrastructure problem than it is a pitch problem, right? And so, as I mentioned, this is real data, right, that we've taken from our active investors about what they're looking for in an opportunity. And the biggest thing to note, and you'll see this across, and I won't go through each of these, but the biggest thing to note is there is a massive gap between what founders are thinking, how they need to communicate what they do in their process, versus what an investor is actually looking for, and even unconsciously what they're looking for. And my background before starting WI was actually marketing, and so this is why WI is such a marketing-led business in the sense that we've accidentally built a three-sided ecosystem as founders, investors, and also the industry itself, right? And it's just because of that sort of marketing aspect. So this is why it was so important for me to help, I suppose, bridge that gap in the way in which you understand it. And I do, by the way, if this is your first, if this is your first webinar that you've done with me, I do have plenty more deep dives on the capital raising process itself, which you're always welcome to go and learn. All right, so let's kick straight into it. So the first one is I wanted to understand, I asked, how do the investors actually classify themselves? So this was an investor survey and it was really interesting. Now, when, if you're at a conference or if you're meeting someone in networking and they turn around and say to you that I'm a founder, straight away, you're thinking that they're pitching what they're doing. Well, what I found really interesting was that, 23% of people, nearly 24, indicated that they were both a founder and investor. And in fact, if you go and actually look at a lot of the clients that Wholesale Investor works with, a lot of them have actually been founders, made money, been investors, sat on boards, and now they're back building their own business, but they're also still actively investing into other opportunities. Now, you note that 44% identify themselves as just an investor, 14% identify themselves as being both an advisor and an investor. And that's a super important one because if you got a card from an accountant or a lawyer or a consultant, straight away you'd wipe them off the map, typically, as far as being a potential investor in your business. And the reality is, they're also active investors themselves. Some of the best ones actually have quite a portfolio of companies. And then you've got 11% that are fund managers, family offices, and then strategic corporate investors, right? So very important to note that. Now, if you note the universe of one that everyone's always targeting, whether it be sort of the fund managers on the VC or the PEs, right? There's a much greater portion of high net worth, founder investors, advisor investors, etc., that you can potentially target for your opportunity. But it's just important to note, I said this was the biggest one that caught my attention was how many people identify as founders and investors. And I knew that before, and I didn't know the exact percentage, but I knew that was quite common, right? But when people come into our world, straight away they've got this perception of what an investor looks like, and it's very different to what the reality is, right? So that's the first most important part. Then we dive into how many investments do they have? And so interesting enough, it was 17% that, it was going to be their first investment in this space. So obviously I appreciate that they're coming to us to be a resource for how they're looking for new opportunities and to learn about the space and to get introduced to it, etc. It was interesting to see that 1 to 5 had 45% of people had 1 to 5 investments, 20% had 6 to 15 investments in their portfolio. The actual standout one for me was to see that 14% had 30 plus investments, right? So you're really navigating a range of different people. You're navigating people that have either got 30 plus investments, right? Or it could be their first investment, right? And this is some of the things that when you're having your first meeting with an investor, these are some of the questions you can ask as far as, ask about their background, their experience, what sort of things they look for, what typically do they invest into, and that can give you a feel for this bit of information. But that was also, it's very, very widespread as far as what their range of investments they have in their portfolio. Next one is we asked what was the sectors of interest that they were looking to actually deploy capital into. And you're all going to look for your own sectors on there. For me, this is all still, everything listed on here is actually still very, very high as far as an interest perspective. If it was under like 5%, that's a bit of a different story, right? But all technology in general is still, at the top of the list. Deep tech, that was the biggest surprise to me, was to see that deep tech was at the top of it, was so high on the list. Now, for me, my thesis around that, and I've communicated that publicly, is I think that with what's happening, in public markets and what's happening with AI, investors actually don't know how to value software businesses anymore, especially if there's no real defined moat for those businesses. And I'll talk about that on another one as far as what they're actually looking for. Um, the other big standout for me was that private equity was third on the list. That's the first time I've ever seen on one of our investor surveys that private equity is so high. And also, likewise, I'm seeing a trend now. And I said I spotted a trend 18 months ago when it comes to life sciences, where I started seeing new life science fund managers coming through. And then all of a sudden, you're seeing not only new fund managers going through, but you're also seeing, we're seeing 4 life science companies become unicorns over the last 12 to 24 months, right? And for me, I think this is going to be quite a significant breakout period for new private equity managers, different to what people see in the big PE firms like a PEP, like a Quadrant, etc. I think you're going to see a range of new and exciting private equity firms sort of coming out, or fund managers, professionalizing what they're doing. Health tech and life sciences obviously still incredibly high, and likewise renewable energy and sustainability related opportunities, private credit, fintech, agri, all still very, very high on the list, right? So for me, this is where they're looking to deploy in 2026. These are the sectors of interest to them. If you note, we design our conferences around this area. Interesting, someone's brought up straight away ESG. I am going to cover ESG in the actual presentation, but just so you know, it's got renewables, energy, and sustainability all in the one area. So that's basically covering that area, but I absolutely will cover ESG because I find that super interesting, where that sits right now as far as importance from an investor's perspective. But this is what investors are looking to deploy in 2026. And when we asked what stage are you looking to invest into companies, they also broke it down for us. So interesting enough, Series A to Series B ranked at the top with 47%, right? Seed and pre-revenue. Now this was interesting. Now, as far as I don't think so basically the seed and pre-revenue, I thought would be lower this, but it's actually still quite high. And that just goes to show you that investors are still looking to invest early into opportunities. And I suppose that does also correlate with the looking to invest into, life sciences, medical devices, and a lot of technical businesses, which are often pre-revenue for some time, and require significant investment to get to a revenue stage. So, to me, that does correlate. I thought it was a really good signal, to see that pre-IPO and late stage was at 38%. And for a lot of the investors that do invest at late stage, that'd be a great signal for them, from a IPO markets perspective. Now, issue enough, this was taking place. We took this obviously before the war kicked off. So it's going to be a real test when we see some of the first IPOs roll out at the start of the year. Obviously, there's been announcements around Koala and so forth. But to me, the signal that if the ASX has a good year when it comes to IPOs, that is a great outcome for all of us, because that typically gets recycled. That capital that they get from that gets recycled back into other opportunities. Now, private equity and buyout sits at 35%. Fund investing sits at 26%, which is obviously correlated quite well. And interestingly enough, distressed and turnaround was at 22%. Right. So you can see that investors have all sorts of different appetites about what stage and what type of opportunity they're actually looking to invest into, whether it be the sector difference, whether it be the stage difference that they're looking to invest into. Different people have their own thesis and their own thematics about what they're actually focused on. So that gives you some insights about what they're looking to invest into right now. By the way, there is one note that I'll say. If you saw that your sector was on the list of the previous one, never take that for granted. I always strongly encourage companies that when your sector is in the spotlight, you've got to make sure you run as hard as possible when it comes from a capital raising perspective, because you never know when that spotlight moves. Case in point, things labeled ESG, and I said I'll mention that in a second. Now, first ticket size. Now, I asked this question very specifically because, again, people have this perception that, a high net worth or a family office investor come into a business and they look to put in a large amount of money straight up front. Well, you know that, 43% look to invest between 25 to 100K as their first investment, and that's an important amount. 21% between 100 to 250. Interesting enough, obviously the other two you can see between 500 and 1 to 5. Interesting enough, 16% are looking to put in 5 million plus, into opportunities. So you can see it's so diverse as far as what people are looking at to place from a first ticket perspective. Right now, I did highlight very specifically first ticket because that then leads on to this one. And the biggest mistake that I see in capital raising is people often see the first investment often as the one and only. They don't realize a significant opportunity that's lying inside their investor base for them to do ongoing participation in their opportunities. And I saw a great example of a company we're working with where an investor put in 200K initially into an opportunity. And then within 12 months, they'd actually invested 8.9 million, into that company. Now, that's interesting because now obviously they had strong track record. There was a lot of things that would have taken place for them to make that decision. But interesting enough, if you look at what investors typically look to do from a follow-on perspective, you can see that, only, where is it, 75% of investors will follow on their investment under the right conditions. Right. So only 25% highlighted that they would not participate in future rounds. So for every investor you're able to attract into your company, you should know that 75% of them can participate further, right, under the right conditions. Now, 51%, this was the stat that was fascinating for me. 51% said that their investment decisions for a follow on was dependent on the opportunity and also the market conditions, right? So, for example, if an investor put in, and I've heard this plenty of times where an investor puts in 50K and then they put in 10 times that for the second round because the company's done incredibly well, or they've hit their milestones, or they've crossed the inflection point that they've highlighted they were going to cross. Whatever the reason is, they've gone and put in an additional amount. 15% that said that they would match their existing investment that they put into a company. 18% said they'd put 2 times the amount, and only 6% said that they would put in the pro rata amount, that was part of it. So it's interesting, different investors have different strategies, but you can see that the big, I suppose, the blue sky opportunity is that it's so situational for a lot of investors, and it's really based on how the company performs as to how much they could potentially invest into your company, right? So the most important thing for you to know is that your future potential investor could already be your current investor, or following your next round, the investors participating in your round after that could be the ones that are coming into this round, right? But of course, you've got to hit your milestones and you've got to do what you said you were going to do. Now, the preferred deal structures, I get asked this all the time. So this was very interesting for me to see as well. So 64% or 63.5% said that they're looking for priced equity rounds right now. And that's interesting because it's obviously been the last 3 to 4 years have just been dominated by convertible note structures, right? Where 36% saying they're interested in convertible notes. Private credit with equity upside was at 33%. Private credit, pure debt and yield was at 27%. And safe note, I often get asked about a safe note, but you can see from the investor's preference perspective, they would prefer either a convertible note or a priced equity round over a safe note. That doesn't mean that you can't get a safe note away. It's just from a preference perspective and from a pure numbers perspective, that's sort of what they're looking for. And sort of, 20% said that they'd be open to secondary opportunities as well. So that's also very relevant to know that, for some investors, they're even open to the idea of coming in as a secondary. So if you've got shareholders that may be looking to exit or whatever, they could come into your business, but they may take out a combination of, secondaries, but also participate in your sort of main round as well. Now, on the target return side, one of the things that you'll find, a lot of companies can sometimes get disheartened when they go to a capital when they go through a capital raise, and they find that effectively they go and pitch to a bunch of VCs and they get rejection from VCs. You got to understand that when you're pitching to a VC, they need to be able to invest into your opportunity on the perspective that you could shoot the lights out so well that you could replace their entire fund, right? That's their mandate. That's what they're looking at from an investment perspective. Whereas when you're dealing with private high net worths and family offices, right, they've got a very different perspective. When it comes to high growth opportunities, you can see that was sort of number one. They're looking for a target return of 3 to 5x their investment, right? Then you've got steady growth, so the private equity, once again, right in alignment with the previous stats, nearly at 34%, where they're looking to 2 to 3x their investment. Venture returns, so the 5 to 10x, sort of returns. Obviously, venture sometimes, the actual VC funds are sometimes looking for 100x returns. But you can see only 28%. It's actually lower than the other. It's actually lower than the other two, interesting enough. Was at 28% as far as what sort of returns that they were seeking when they were investing into it. Now, interesting enough, at the outlier, and this is where deep tech, and once again goes right into alignment, 24% were looking for 10x returns. And interesting enough, only 7.5% said that they don't invest into equity. So they're only looking for pure yield when they invest into opportunities. So that gives you a bit of a snapshot of what venture investors are looking for from a returns perspective. And I've said this quite often to investors, when you're sort of creating your use of funds deck, you often have to tie that use of funds into what your sort of key growth drivers are. And you're typically outlining two or three main growth drivers where you're going to be investing the capital. And they want to try and understand how from that they can generate a 5x return. And it's funny how this shows up in the data around that sort of 3 to 5x, even 2 to 5. But just gives you a perspective on the psychology of what an investor is looking for when they're investing into your company. Now, the second part to that is, the liquidity horizon. Now, this also down the track, I'll show it as far as frustrations, but, investors for a long time, VCs, gave the narrative to every company, don't think about liquidity, right? Don't talk to me about an exit or anything. And it's funny enough how this is dominant now where, it really is expected where you do have in some sort of mind what could be some sort of return or liquidity horizon for a potential investor, right? And interesting enough, it's not as unreasonable as what people would think. Interesting enough, 3 to 5 years seems to be the medium term, that sort of about 46%. 5 to 7 years, is sitting at 25%. Less than 2 years, and that's obviously a certain type of investor, is at 16%. And then you got patient capital, sitting at 8%, which is around that sort of 7 to 10 years plus. And typically you find that would be a correlation with some of the more professional and family office investors. But you can see that standard that they're looking for is anywhere between that sort of 3 to 7 year horizon, from when they're hoping to get a return from their investment into you. Now, does that always play out like that? No. But from their own investment thesis about how they're thinking about an opportunity, that's what they want to understand is what could that liquidity opportunity look like over the next 3 to 7 year period, right? And then yield focus sitting at 3.57%. Now, this was an important one for me, and I've really utilized this data, as part of what we've been doing from an agent perspective. I said, when everyone comes to us, said everyone wants to make sure that they get their pitch deck right. And so when we were doing the survey, as far as what investors are actually looking for before they take a meeting, the first thing that they're looking at, the number one thing is the management track record. What is the been there, done that experience of the team? Second thing they're looking for is that any type of commercial traction. So that could be pipeline orders, it could be early interest that you're getting, it could be anything that you can articulate as potential commercial traction. They've got an issue in that. But right alongside that at the same percentage, right, is competitive moat. And if anything's sort of really educating investors about, understanding a competitive moat before, it's not, how many developers you've got building software anymore, because that's been absolutely decimated. Is What is the real technical, the regulatory, the data, the ecosystem? What is the real IP or the distribution IP that you have? And I must say, there's a great podcast that was done this week by Harry Stebbing. I can't remember the guy's name, but I did do an article on it. I think I even did a post on it, where he talked about the eight different competitive moats that you can build inside of a company, and how the goal is to try and build at least sort of 3 to 4 strong competitive moats around your business going forward. Path to liquidity, instead, you can see that that's now a new priority. Cap table quality, IP and research depth, and as the question was brought up before, about ESG. What's really so funny about markets, as I said, sentiment can change in an instant. When BlackRock when Larry Fink come out and said that, they are going to stop using the term ESG, it was I think it was like August 2023. It literally just disappeared off the radar, right? And you've seen that. And companies have had to reshape their messaging. Some companies haven't done that, haven't reshaped it. But it's interesting how that has just gone from being so important in 2022 and 2021 to now it's off the radar of investors. But you can see what their priority is right now is track record, commercial traction, competitive mode, path liquidity, cap table quality, and the IP and research depth all sit there, as high priority elements as far as what they're actually looking for in an opportunity before they take it. And by the way, if you're thinking about how you want to communicate your opportunity, I would suggest you make it in alignment with these factors, right? Because as much as you want to sell your technology, right, these are factors that they're trying to understand. And I know I did that at Emergence with quite a few of the companies I was doing introductions for. All right. Now, this was another one that was interesting for me. And I said, I explain this to people over and over again, but they never really quite understand it. And funny enough, sometimes the people I'm explaining to are some of the people that fit this model where they're actually wearing multi-role, they're doing multi-roles themselves. Funny enough, one of the people that's helping me is actually a family office that's also an investor, that's also a CEO himself, and actually also investing into private companies. He's got two different hats, does private equity investments, and didn't quite understand this concept of this multi-role until I explained that you're actually an example of it. And they go, oh yeah, right. So it's interesting, right? So investors as advisors, 66% of investors, also perform an advisory support function. So they said that they're happy to do, ad hoc meetings and support in whatever way they actually could, right? And the interesting stat about that is you find that investors invest into opportunities which they feel they can add value to in some way, or they want to be supportive in some way. 41% said that they connect their portfolio companies to other investors. And that's another important point. So not only is the investor that's coming into your company a potential investor for a future round, but they're also got a high probability that they're likely to introduce you to other investors as well. And I said, I know I've definitely experienced that in my journey several times. 37%, have fundraising and M&A experience, right? Which can be unbelievably helpful, when it comes time to be thinking about an exit. 26% said that they're happy to be syndicate leads, right? And this is also something new for us. I had no idea it was going to be that high. So 26% of active investors are not only happy to participate, not only happy to do introductions, but actually happy to take the lead and be a syndicate leader in actually helping you with future capital raising rounds. And this, and then the last one is the formal advisory practice. And that, once again, aligns with that first stat of how many percentage of people are also advisors and also investors. Now, what my most important thing I want you to take away from this is there's an incredible wealth of value in active high net worth and family offices that invest in their portfolio companies that's never actually talked about. You will never see this talked about anywhere else outside of the conversations that I have because everyone's so focused on the pitch deck. Right. And so as you start to see this data play out, you start to realize there's so much more potential and untapped opportunity. And to be honest, some of the advice you could get from some of these investors, you're talking about people with 15 to 30 years worth of networks that they've built, that they're happy to provide an introduction to, that takes on their credibility. when they're providing those introductions. That is incredibly powerful for any founder going through a capital raise. All right. So personal conviction areas, so area of focus for investment in innovation, right? So all these, I thought, now the reason why I asked this question is because I wanted to understand, what is the context around, what is the underlying thesis that are driving people's thought process, around how they're looking to invest into opportunities. And that was important for me because effectively that often then goes and shapes the sectors and the areas which are of interest to them. So AI and its exponential potential, right, was 42%, right? For future of finance, 33%, food security and agriculture was seeing at 33%, aging, longevity and elder care was seeing at 27%. And by the way, you can see all this tied back in so nicely to the sectors mentioned before. Financial inclusion and access, 24%. Climate change and sustainability was at 20%. Education, access and equity, 16, and then mental health and well-being, 18, and then mental health and well-being at 16%. So all of them have got their own areas of conviction. And sometimes it's important to ask, like, what is your underlying thesis sort of around the space that we're actually building in, right? And often people are trying to solve the problems that they see that are around their own thesis. So that will give you some perspective. So just someone's asked around the people that participated, it was about 400 or so that participated sort of in the survey, to give you an idea. So it's actually quite a big sample size from a data perspective. So operational expertise. Now, this was an important one. Again, as I highlighted before, like you're talking about 15 to 30 years of untapped, consulting experience or industry connections that you can tap into. By the way, one of the things I've also noticed is that a lot of investors that have actually made their money, right, and are now not actively sort of building, they often they end up being consultants and advisors, not because they have dreams of being consultants and advisors. It's more that they keep on being tapped on the shoulder to help in different situations. So then all they ultimately do is just formalize it into a business, right? So this is why, they said there's, and it's been the surprise for me as well, how many people that are consultants are also active investors. So first one is financial services and banking, and obviously this would be across multiple different sectors, 50%, right? So a large proportion of the people that invest in this space have financial services and banking background experience. These next two, I found really interesting how high they actually were. So sales, go-to-market, finance, CFO, energy and infrastructure, all very, very high. Real estate, property, manufacturing, industrial, enterprise, all very high on the list. And then likewise, I was very surprised to see how many people were involved in healthcare, pharma, and biotech, right? So there's a lot of experience across multiple sectors and stuff that I said that you can actually tap into, as a founder with your potential investors. And again, you're talking about people with 15 to 30 years of trusted networks that they've built up in that time. All right, so biggest frustration, I'll have a quick drink. So the biggest frustrations, number one, was a lack of liquidity, right? So hence why exit's really high on the radar now for interest from investors. Too much noise, not enough signal, right? And again, part of this is how people actually communicate their opportunity. Everyone wants to go hard on the technology, but they forget about how to communicate those aspects that they really want to understand, which is management team, track record, IP, what's the moat, etc. All those other things I highlighted before. The thesis mismatch, right? So I said, they've got their own investment thesis about what they're looking into. You've got your business case thesis and also your plans for how you plan to grow. If that's not aligned, then there's not going to be any deal. The due diligence, the biggest frustration I hear from investors is often how long it takes for founders to get information back to potential investors. And often, I learned this from one of my sort of advisory friends, where he said there's two things that kill deals: time and lawyers. right? So, if there's any lawyers on this, don't take that to heart. That was just what he told me. Opportunities arrive too late or founders disappear after investment, right? Good to see that was actually low. It was nice to see that was actually quite low, but it is there as a frustration. But you can see that, and you can think about these last 5 years, or sorry, last sort of 4 years, this has been an issue. There hasn't really been an IPO market, for a lot of the early stage space. The ASX made it more difficult for, early stage companies to list. So there's a whole bunch of factors, that go around that sort of lack of liquidity or exit options, for companies. All right. This one was no surprise, or not for me anyway, but how they want to get opportunities via email. Fortunately, I helped with that. So, it still remains a dominant communication channel, right? So, don't be surprised if, that's how investors you're dealing with like to have their communication. I know for me, a lot of my shareholders, not a lot, a few of my shareholders I've never actually met in person, or when I've done, it's been the first time I've actually met them. All my communications with them have been either via email, or they've been on information sessions of mine, or they've been following, but we've never actually met in person, or it's just been on phone calls, right? So that's not uncommon. So the real gap, I said, and this is the investor momentum gap. The real problem, really goes from companies lose actually momentum in the gap between the initial interest, right, and then also in the consistent follow up. And it's so funny. People get really sensitive around this sort of stuff because, often, I know many of you may have backgrounds in science or in engineering, or whatever it may be. So getting rejection or understanding the follow-up required that's part of the process, or the engagement required that's part of the process, people don't quite understand. So the fundamental lesson I'll provide is that understand capital raising is simply a marketing, build a top of funnel pipeline, and a sales process, right? And it's very normal that everything that takes place in a capital raising also happens to sales people or business development people everywhere around the world. It's just that for us, when we're raising money, we are super sensitive on it, because this is something we spend our lives. We spend 24/7. We put everything on the line. We put our hearts, we put our soul into everything that we do. And other people, don't, and then if someone starts ghosting us or goes quiet or whatever, we take that personally, right? Just don't. It's just part of the actual process. All right. So a concept I really want to introduce to everyone as part of this, and in fact, I'm going to call it the investor engagement compound loop. And the best way I can say, so I've got someone sneezing in the office next to me. The best way to articulate this is, you got to think about it. It's like you're planting seeds into a garden, and with every day and with every time you water it, and every time you nurture that garden, those seeds will grow. The only difference is with capital raising is you don't know when they will sprout, right? Or when they will actually return into fruit, for you, or turn into opportunity for you. And that's the hardest part about this, is sometimes you can be doing all this, you can be doing a significant amount of engagement, or updates and so forth, and you don't feel like it's moving, and then all of a sudden it all comes at once. It's just it's just one of the most unique processes you can go through. But I'll highlight to you that every single investor touch point compounds, and the way you've got to think about it is like interest on capital, right? So you put your money into an investment. That investment is called your investor engagement loop, right? And that value will compound and will return at some time, right? You just don't know when, or it could be around when you actually go into your capital raising mode, right? And it's really part of building the warmth and building the interest and building the top of mind awareness. And that's the whole purpose of this, is how do you build that? How do you get top of mind with a potential investor? And then how do you stay top of mind? So how the loop works is, it's really from consistent touch points, right? And I use the term, there's a term in psychology called the mere exposure effect. And we talk about it in marketing. They actually come from marketing, where they say someone's got to see a brand at least 7 times before they start to feel familiar with that brand. And the more touch points they have with that brand, the more they have their perception about it, whether it be good or bad, right? So marketing really leans into this, and people now say it can be 15 to 20 times now, because of how much information we're inundated with social media. I'll often see a company name. I think I know that company name from somewhere. I check my email and there's like 20 different emails with their name in it, right? That's the power of near exposure effect and consistency. One of the best companies I've seen do this recently is, we've been working with them now for just over 12 months, is Deltine. If you've been seeing Deltine, if you've seen David present at one of our events, when we first started working with him, he had just set up his fund, right? And he was looking to acquire his first motel. He does a great job of consistently communicating with potential investors. He's now done 4 sites, and it's on track for his first target of getting 100 mil of assets under management. And what he does is he sends out nice communications. He puts on nice LinkedIn posts, and you think, geez, motels must be pretty boring. But what he does is he engages people. He actually goes out, he takes videos on sites, he gives a bit of an explanation of the demographics of the area. He helps you understand who are the people that are staying in that hotel. So whilst investor needs their brain, their logical part of their brain needs to understand the financials and how that deal stacks up, that's fine. What he's taking care of is the visual and the experiential part, because he knows that most of those investors aren't going to be flying out to go and see those sites, which can be 4 or 5 hours from a major city. So he needs to take them into his world and what he's seeing, why he's looking at it, what his thesis is around that, what he's understood about the opportunity. And with that, he's just found his interest just keeps on compounding with it because he's taken them into his world, right? So this is, and then now with that, he's now got a warm list of investors. When he goes into it, when he releases a new opportunity, it's much easier for him to get those first allocations done because he's been planting those seeds with his potential investors. And also he delivers great returns as well. So it's not he doesn't have a great, he's got an incredibly good product from an investor side, but he's also done the work on that compound engagement loop, right? So understand that. And the reason I spend time on this is because typically what most people do is they say, I want to raise money. They spend 3 months on their pitch deck and then they launch and then they think about building out their investor engagement. Do your investor engagement. As I said, my 4 principles are always be raising, always be raising, and obviously get to sorry, that's 2 of the principles. Basically always be raising and get to the fastest yes or no. But the key thing is always be raising, right? And that is you're always engaging with investors. Doesn't mean you're always bringing capital into the company. It's you're always engaging with investors about your opportunity. All right. So, for me, I was going to give a bit of an insight into what Capital HQ is. So I hope that investor data was super helpful. And surely I'm going to go through a bit of a live demonstration of our agents. So I'll give you some insights into what that looks like and what we've been working on. So firstly, but with Capital HQ, people try and understand. I'll go through our special offer we've got for the month of March, which is the actual second birthday of our launch of the brand of Capital HQ. So it's not just a CRM. It's not designed to be just a data room. It's not designed to be a fundraising database, and it's completely designed to be a capital engagement system. Like everything I just showed you in the data, the reason I built it was subconsciously I knew that data. I didn't know the exact percentages, but I knew that data. But subconsciously, I knew that this whole game was about engagement. This whole game was relational. Everyone else teaches transactional. So I wanted to educate and also provide a product that assists founders in turning their capital raising from being one of the biggest weaknesses and frustrations into a process, right? Into a bit of a science, but also into a strength that they've got some sort of confidence in when they go into the actual process, right? So the idea is that systems compound, tools don't, right? And that's why people they go from round. Typically, what people do is they spin up a data room, right? They go through a raise and then they shut it down or they don't do anything with it. And then they go about building their business for 12 to 18, 24 months. And then when they're looking to raise capital again, they start the whole process again. And if you think about if every sports team did that, they just wouldn't be at the top of their game, right? That's the reason why they're always training, they're always practicing. They only have a couple months off per year, but they always stay sharp with their skills. And that's also another important part of this process. But everything we've thought about in what we've built to date, and I've built it, by the way, going through my own experiences and my own frustrations with raising capital, right? And obviously I've utilized it to raise capital to build the product itself and also to build Wholesale Investor. So everything's designed around that. So the key things we're really looking to solve for companies now going forward is, number one, the lack of structure, right, in their process. We've designed everything to be streamlined and simplified for both investors and founders, right? Because once again, what's the biggest killer of deals? Time, right? So investors want to find relevant information that they're interested in. They want their questions answered before they ask them, right? And they also want to get access. They want to get their full, and they also want to look at an opportunity when no one's talking to them. You know, when they want to be doing a deep dive at 10 p.m. at night, they don't want to be talking to you when they're doing that deep dive. They want to do it on their own time and on their own terms. So they've typically got a weak follow, the weak follow-up rhythm that most people have, the poor investor visibility, the manual communications, and the last one is that repeated diligence frictions. It's all designed to help streamline and simplify that from both sides, right? So, to me, the key features we're sort of built into is intelligent deal rooms, which I'll sort of mention, which I'll cover that. But all those things that I've highlighted as far as what investors are looking for, it's designed to be upfront so they can see that really clearly, right? So the story, the model, the traction, the raising gate, the raise engagement's optional for companies and how they do it. But I mean the raise engagement as far as how you're engaging with them, in the capital raise, and also what your actual offer is, because some people, for some reason keep it hidden. The investor relation systems, the contacts, all that, the updates, cadence, the communication history, the engagement, all that you can access in it. And again, that's one of the biggest friction points I see for most companies. When you're spinning up and spinning down a room, all this gets lost. So for me, that's what I said. The people have their marketing department, they have their sales department. The way you got to think about this is your capital raising department, and this is your always on, right? Always engaging, always, building relationships. It should always be working for you. So, if an investor you spoke to 2 months ago wants to come back and revisit, what you're up to in your announcements, they should be able to see that, right? And it does solve, for me that, I do have, quite a few shareholders. They can literally just come into my room at any time. They can see all the different announcements we've got in there, the updates, and then likewise the updated information as well. All right, automated publishing, again, just making some of the stuff really simple. And then this has probably been the best help for most companies is the frequently asked questions tool. That discipline of when you get asked a question over and over again, I use a rule. If you get asked something 3 times, turn that either into an FAQ, a frequently asked question, or into a document so that other investors don't have to ask you that question. The better structured your frequently asked questions are, the less time, that, they have to spend asking you. It basically saves both of you time. It also looks more professional from your side. All right, so now what I'm going to do is going to introduce you to our capital engagement agent. So I'm just going to give you a quick demo. Now, basically what we're looking to solve with this is effectively, I understand that you don't like raising capital, right? No one does. I can count on one hand how many people have actually said they like raising capital. I know that you often get frustrated. Investors don't fully understand your business, right? And also the process can feel like basically raising capital is like this, that image just summarized it perfectly when I saw it. You've got this weight on your shoulders that you can't describe it to anyone. It's hard to explain. And you can't even articulate what it is, but it just always sits there. The only thing you know is when it's slightly lifted off, right? And so, that's our goal in building our agent. As I said, to be able to replicate what's in my mind and what I understand and what what I've educated on, what best practices is, to be able to build that into a product has always been my dream. So the typical bottlenecks I find in this space is founders spend too much time on the pitch deck. The opportunity is often stronger than what their communications are around it. And the real problem isn't just content creation, right? The problem is basically having investor-ready communications right across the board. All right. So basically, key things that we're going to be doing as part of what we're building. Now, hang on, on this slide. Hang on. Okay, so what I'm going to do now is I'm just going to give you a quick demo. I'm just going to turn this off for a second. Right. I'm just going to give you a quick demonstration. All right. So let me just share this. All right, so now the company that I've chosen is a company called Invion, and it's an ASX listed company. I asked Tian if I could, and he said I could. So I've asked him to, basically what I've done is Invion's a life science company, and life science companies are often the hardest ones to communicate, when it comes to capital raising. So what I've done, and let me just turn off dark mode for a second. So what I've done is I basically use the agent to create what his deal room summary could look like. Now, if you actually go to the Invion website, I'll just bring it up here. So this is the Invion website. You can tell it's a life science company. Now it's got all stuff around sort of, can everyone see that page? Did I share the wrong? No, you can see it. Okay. So basically you can see, Invion is developing a photodynamic therapy technology for the treatment of a range of cancers, all the usual stuff around it. It's obviously got a technical aspect to it, and then you go to the About Us, about Invion, more details about it, a little bit of high level stuff, company pipeline, an overview of what they're solving, etc. Now, if you think about all that, you probably would have seen all that information. And typically, and you got to remember, you've got 30 or 60 seconds to capture someone's attention, right? So what I did was I actually took his website, I put it into our agent, and then what I got it to build for me was actually a deck, right? And what I want to show you is what is the outputs of the first deck. Now, as I said, when I teach people about capital raising education, I highlight that the hero text is the most important part, then followed by a description, and then you sort of talk about the investment highlights, right? Now, how different is that when you understand? And if Tian's on, he can, give me feedback in the chat. Well, I haven't shown this to Tian, by the way. I just asked him for permission to actually do it. So you can see, as far as a headline text, right, that is a powerful way to start. For someone to understand what they do, if you think about how that differs from trying to understand this from the actual homepage, right, it says the same thing in a very different way that's very simple. Now, what's really interesting is someone like Invion, they have two different investors. They've got their retail investor because they're a listed company, and then they've also got their institutional investors. So this was targeted to what would be more retail, high net worth investors, right? So simplifying the story. And then it breaks through, the problem cancer treatment hasn't changed enough. And it goes through 10 million people die from cancer globally every year. The treatments, how they actually have how they impact, and we've probably all experienced this with our family members. And then it talks about the actual size of the market. Patients and families deserve treatments that kill the cancer, not the patient. And that's always one of the biggest issues when it comes to cancer treatments. And then initially it goes into describe the solution really simply, right? Now, so you could spend so much time going through their information and still not understand this, right? But it says step one, what it does, step two, what it does, and then step three. And by the way, this is not designed to be his ultimate pitch deck he used with an investor. It's designed to shape the thinking of the way in which he communicates his opportunity with a potential investor, right? So you can see, once again, unlike chemo or radiation, Photosoft only activates where the light is directed, meaning no systemic toxicity, minimal side effects, and fast recovery for patients, right? Then it goes in to say, okay, why is it different? 300 patent compounds, selective activation. By the way, this will end up being a big moat, and I'll show you why this becomes really significant. And by the way, this was just done in like 15 minutes of me just playing around with the agent, right? So all this becomes, it tells it really clearly what their actual pipeline is, where they're at, and what their next stages are. So any investor can understand exactly where they're at, what the roadmap is from a de-risking perspective, at a high level. And you could imagine, him communicating these elements at an investor conference. And it obviously highlights, Peter McCallum from the Cancer Center, world-class research partners, right? All the key things that a life science company would want to be highlighting. Now, this one I added. This one wasn't on the first version. I actually added when I did some competitor mapping, but I did some competitor mapping for him and helped him understand that basically their market cap is around 7 million, but it showed other companies, in the area that are basically sitting at 6 to 29 times less than their PDT tiers. right? Now, the reason for that is to show that there's actually a valuation gap between where he's at and where some of his commercial partners at. And that sort of demonstrates to investors potential upside, in that opportunity. Now, to give even more detail on that, it then breaks down how they actually compare to their actual other competitors. Now, this would be more relevant, to Tian than to anyone else on this. If you can think about it, if you can do that for a life science company, what can it do for every other, company sort of in their area? And then it shows a median peer valuation and how much it's above theirs. And then it's showing where their market cap is, their different listings that they have, all done within seconds, right? And it's got the team, and then the thesis. India is building a platform that uses light to kill cancer precisely with human safety already proven, 300 plus patent compounds, and a market cap that doesn't yet reflect the pipeline. All right. If someone's reading out to an investor, that's a very powerful statement. Right. Now, even more than that, I then got to then go and do a demonstration. I then asked to produce a pitch deck for institutional investors on it. And you see it's got a completely different terminology and how it's actually communicating that opportunity. So it shows you the agility of how the agent works in communicating opportunities to different types of investors, right? And these are the different things that are highlighted. You can see it's focused on the pipeline, the peer valuation, capital structure and recent raises, research, commercial pipeline. It's got 14 slides to it. Interesting enough, it had this valuation waterfall I found really cool, the way it did it, basically showing what the potential valuation inflection points are for the company as they achieve various different milestones. And then it provides references for others, provides references around others that have done that. But it gives you some perspective about how it could build a potential valuation. And then it even highlights the risk factors, right? Now, all these risk factors are quite common in small and micro cap companies, right? But for an institutional investor, near-term catalyst calendar, and that's again, valuation inflection, leadership and governance, and then the investment summary, right? So basically that was all basic just from his website and going through the information that's available online. Now, also I did a deal room summary page. So I then highlighted as far as, the primary hero text, then also the company description, followed by the elevator pitch to make it really simple to understand them. And then also followed by the investment highlights, right? So all this sort of stuff, and again, forget the icons. It's more about the idea is how do you take your information and communicate it really clearly and succinctly to potential investors, right? I said this valuation waterfall chart, I absolutely loved it when I saw that. I'm sure Tian will want me to share that with him. But it was pretty cool to see what that could actually look like. And it said it's obviously gone around the globe to get that information, right? And then there's one more thing I want to show. Oh, yeah. And then effectively, what I then asked it to do was I asked it to build out a range of frequently asked questions because, you're all going to have FAQs in your actual deal room. So basically went out, built a whole bunch of frequently asked questions. Now, the idea is that he doesn't just take all these and put into his deal room. He can selectively put in all the ones which he thinks are most relevant, whether it be understanding the science, the clinical and regulatory risks, et cetera, the valuation, financials, liquidity, all that sort of stuff, right? So it gives him optionality on what he puts in there. But the most important part is I know people doing this by themselves, they can often spend 1, 2, and 3 months doing this sort of stuff. The idea for us is that we take it off your shoulders and help as part of this process. So basically what we're doing as part of our second birthday with Capital HQ is actually helping you with this process. So I'm just going to stop that share for a second. So as mentioned, key things are going to be covering. And by the way, Tian, if you're on, I hope you enjoyed seeing your own company highlighted like that. Okay, so just going back to the presentation. All right, so what we're doing as part of our second birthday, I said we've got a special offer for it, but we're actually going to be doing this manually with it because, as I said, it is in beta test. Even though it's producing incredible outcomes like what I just showed you, we want to make sure it's absolutely perfect by the time we actually go to launch. So not only are we going to be helping, doing it manually with you, whilst we actually sort of build the, sort of refined, what we're doing in the back end, but then also launch into the product. So we're going to be manually helping with that actual process. And, we're including all the support around it. So all the materials, example materials, whether it be pitch decks, frequently asked questions, competitor mapping, all the simple sort of stuff, that you can do that said takes a fair amount of time. We even got things like we're doing one where the top 5 to 10 tough questions that investors could potentially ask. That sort of stuff, and then providing Q&A around it. It's all designed to help you how you frame your thinking about your opportunity, and then you can take the best of what you think is most suitable for you and then utilize it. But that's the most important part. So this is what you get as part of the process of, as part of our second birthday. In the first 3 months, in the first month, we're doing the onboarding and actually helping you structure your content like what I just showed: pitch deck, FAQ, competitor mapping, investor communication flow. You can even build out a pipeline of sort of 12 months of communication touch points with potential investors, right? Month 2 will be reviewing and refining it. So we want to get your feedback after month 1 as far as what parts you thought were most helpful from an output perspective, right? As part of our sort of training, what we're doing. And then also, really set the priorities from a capital raise perspective and a timing, as far as, and then basically build the strategy around your timing of your raise, right? So what you need to be doing during that process. And then month 3 is around the strategic check-in as far as just making sure that's on track from your side. So what we help you create in month 1 is investor-friendly pitch deck, as I just showed you. And one of you may be wanting a high net worth, one of you may be wanting a private investor version. Other you may want an institutional grade. As I said, it's got agility to do both. Executive summary, investment highlights, frequently asked questions, clear business articulation, right? Especially for the more technical businesses as well. And by the way, if it's a fund, it's just as relevant for you as well. Like we have specific, we've got specific focus on funds in the agent as well. And then the idea is it's more designed to how to take your business and help other people understand it really, really clearly. And I'll say this: if you're an existing client of Wholesale Investor as well, we're happy to include you as part of our beta testing as well. All you need to do is just reach out to Jackie and Rhythm, and they'll be happy to work with you on the agent too. I said, as much data and input as we can get from you, right? Then it helps us sort of build. As I said, we're already getting incredible outputs, but we want to make sure it's as best as we possibly can, because in getting this right, not only do we solve the problem for you, but we solve the massive, significant friction point for the entire ecosystem on both sides. All this other stuff is included in part of it. Like, it's all designed that whatever you're going through, whatever you're experiencing, there's no judgment on it. It's really about articulating it and then coming up with solutions for it, right? So it's basically your technical sparring partner that is always on for you whilst you're going through your capital raising process, right? So obviously I just went through that demo. So, if this is your first time coming across Wholesale Investor, we've got an incredible amount of success stories across life sciences, renewable energy. Actually, Victoria is one of my favorite. We still work with that. I've been working with Victoria since 2009 across a range of capital raisings, secondaries, you name it. We've worked with her across pretty much everything, right? And we were actually meant to be going to Dubai together until war kicked off. So, we've worked with them, quite successfully. National Renewable Network. I love using Alan as an example because he got his first customer from us, his first investors from us, his first syndicate lead from us, his first advisor from us. So literally a lot of his firsts all come from our ecosystem. And it's not because we're so amazing, right? We just do what we do. He does it with his process. He is unbelievably persistent, and also does a lot to actually get out there what they're doing and engage with investors, right? So, we played our role, but he absolutely did his part in the process. Mark, I did a webinar with him yesterday. Been working with Mark for 5 years, actually around that same time as NRM. Been working with him for 5 years. And funny enough, how I come across Mark was that he got introduced to me through John Diddams, and Mark reached out to John Diddams after watching one of my interviews I did during the COVID period. But he's now, raised over 20 million, but actually 10 million come from one investor. And effectively that was from our network. So even though he's raised from other investors in our network, just one investor put in 10 million into his business, and his largest shareholder is scaling the business nationally. And it just gives you the power of doing it. Said both these companies we have worked with year in, year out for 5 years. as I said, most people want such instant gratification in this space. Both these guys understand the power of consistency and just being visible and engaging with an ecosystem. Right. So I'm just going to show you a quick video, and I'll just pause it for a second. I'm just going to show a quick video just to give a reference for those of you who haven't been in our ecosystem, or maybe you've been following us for some time. I'm just going to show you a video of just some of the examples of other companies that we've worked with. So I'm just going to turn off my video. Play it.
All of this year has been full-time fundraising for me. It definitely takes a lot more time than I thought it would. I think the main hurdle is finding the right profile of investor for our opportunity.
How many conversations you had before getting your first investment?
Around 250.
During your race, you have to be confident that you keep that momentum going.
It's very difficult when you're trying to build a company and trying to cap raise at the same time.
The hardest thing in founding a business is raising the capital. For a business like ours, capital is oxygen. I think any founder needs to be prepared to grind. It's not an easy job.
Will we still be alive when we do finally get an investor?
How to sort the people who are really intending to invest from the people who are just kicking tires.
If you launch a cap raise and you're not prepared, then it will take you much longer, but you'll also turn off a lot of investors along the way.
We really use the platform a lot to screen people and to help us to find the investors that could make a real difference for us.
It mitigated a lot of time investment, allowed us to focus a lot on the business, and we had a great team behind us helping us.
You're a platform, an ecosystem, an integrated network we all know enables to speak to so many people around the world that we would not be able to do otherwise.
Gave us, I suppose, that discipline of getting the information out there. So, really good categories, that centralized platform that we could keep on top of all our documents. It also gave the potential investors the ability to look at the information in their own time. Having one source of truth for information for investors, you could see who had looked at your platform. It sort of prompted you to follow up.
So we've only been with Wholesale Investor about 6 months now. We've raised $3 million through the platform.
We use Wholesale Investor's platform to raise our seed round. We raised about $1.3 million.
In fact, our US JV partner came indirectly through Wholesale Investor. We've raised somewhere between 20 to 30 million.
We just signed an agreement about a month ago for a $7.5 million project in Queensland.
One actually came through Wholesale Investor, was an introduction, and they're coming on board, and they're rolling out hundreds of sites that will have solar and battery.
Fantastic. We've raised $3.5 million in equity to be able to build the foundations in the organisation. As of the 1st of December, I'm now contracted as the managing director of an ASX listed company.
I feel really lucky because I think Wholesale Investor for me has listened. They've not only listened, but they've delivered and brought not only investment partners, but actually has the ability to be seen and you have extra exposure.
We came seeking finance, but we're going to leave probably doubling or tripling the size of our app by incorporating other people's tech and other ideas and things and collaborating together, which is something we were not expecting.
Did the seed raise on the Wholesale Investor platform to start our global expansion. And we'll be back to Wholesale Investor to raise our next round on theirs.
So it's not just about investment. This platform has just opened up such a massive amount of global opportunity for Rex Energy.
All right, so that gives you some of the real, as far as companies that we've worked with and sort of what they've experienced and done with us. So as I said, this is where, we can take sort of the ideas that I've sort of talked about this and what you've seen in everything, actually convert it into, into your own sort of, I suppose, engagement process when it comes to raising money. So the key reason why we're actually doing, and for me, this is the only time I can do this, special birthday offer, for our second birthday. And the reason is the economics just will not make sense going forward once we actually launch the agent. But effectively, the reason why I'm giving a special lifetime access to Capital HQ is that, number one, as I mentioned before, the engagement compounds over time. You don't have to be buying it every single year, year in, year out. It's really about, this can become your capital raising source of truth. It's where investors 3 years from now can come in, they can see everything you've done, everything you've executed on, your frequently asked questions done, but more importantly, you've got data across that 3 to 5 years about how investors have actually engaged with your opportunity. And everything that means that what you do, it becomes a lot sort of more powerful when you actually go. It's really funny. Everyone tries to get data around their marketing, around their sales, around their, around their technology and so forth. But literally no one thinks about data around their capital raising. But obviously I have. And then of course, the biggest part is that over time, the agent will perform better and better, both as AI gets better, but also as it learns more and more, about your business and about the potential investors in your company. And everything we're thinking about is that how to take off that. Basically, it's designed to be two things. Number one, a capital raising strategist and an investor relations specialist. That is the whole foundational elements it's designed to be, and it's designed to be on your shoulder or in what you're working on. I said at the start, we're going to be doing it manually for you. That's what we're building into Capital HQ. So, it's basically you can own your actual capital raising infrastructure forever, buy it once, and then that's it. So, and this is the best part for most people. Your capital raising in the future will not start when you go to launch it. It will start basically from the day you engage, because you're going to be planting those seeds from that time onwards, right? Because that's what it's designed to assist you with. And so the best way to describe it, and like I can't even tell you how many times it's helped me for my own journey. I've raised capital during COVID. I've pretty much launched capital raises at the worst possible times. When I launched a capital raise on March the 2nd, 2020, to give you an idea. I got no. And then I had to go back in June of that year. And the reason why, obviously, everyone's freaking out around COVID. And then I went back in June. I completed a round within the space of a month, right? And you just wouldn't expect that, right? But that's because of what we built from an engagement perspective. And so that's what I always articulate people. It's really not the cost of Capital HQ is actually minimal compared to the actual cost of a lost potential investor, because you didn't have the right engagement process or the right process from a capital, or the right positioning from a capital raising perspective. But more importantly, that the weight of the show is in how you communicate yourself, I think is super important. Now, the way I put this in here is I just want to articulate that if you were to get Capital HQ for 5 years, that's what it would actually cost. That's what we normally sell it out day in and day out, right? And I put in 5 because it's a lifetime subscription offer, but I'm assuming that you're at least going to be running your company for at least 5 years, but it's designed to be structured, so to put a value on it, that's where you get the 26,250. But for, basically for the month of March, as part of our special offer, we're making available to everyone for 5,250 plus GST. And even more than that, you can utilize our third-party partner and you can spread those payments. This is for the Australian companies, by the way. For Australian and New Zealand companies, for international, we can't do that. But you can spread those payments across 4 or 6 months. And it's just purely for Capital HQ. And it's an absolutely ridiculous offer, right? But said, the key part for me is I want to do something special for this testing of our agent number 1, and also for our 2nd birthday. And ultimately for me, I know the value that companies that have utilized that and utilized it right, that valuation compound, like NRN's now, right, in their last raise, they raised 67 million. I said, Mark said, there's a reason why they keep engaging with us year in and year out. But the whole idea is that our 30-day operational guarantee for every company on here, because there's so many times I speak to companies, I need to get this ready, I need to get that ready. No need to. We can actually assist you in that first 30 days of getting everything set up so that you are ready to go and ready to engage with investors as actually part of the raise. So in the idea is that if you don't feel it's in that 30 days, we go hands-on to make sure that it's actually set up for you. Right. And that's, basically get in there and personally fix it to the point where you're happy to go and communicate with investors. So rather than delaying your capital raise 1, 2, 3 months because you feel you're not ready, I said, let it do the work, with our team, of course, to actually help you get set up and get prepared. So effectively, this is what's on offer, just to give you an idea for March. I said, as I've highlighted, you've seen what investors have told us, you've seen where the gap is, right? It makes it really clear. You're seeing what it can build. This is a founding member bonus for our Capital HQ agent. I said, I'm as you can tell, I've been blown away by the feedback people have been giving us about it. And likewise, the people I've been doing demonstrations on have also been blown away about it. What's even more important is for the founding members coming on, we're going to be hosting a global online showcase on Capital HQ on April the 9th. You will also be able to participate in that. So not only are we going to help you get ready, as part of it with the agent, but also you get the opportunity to feature your business as part of our global online showcase on the 9th of March. But even more than that, we've got different options for you depending on what you're looking to do. So, effectively at our base level, at our silver level, which is for many of you, can be the starting point for you. It's 5,250 plus GST. You get lifetime access to Capital HQ, valued in for 5 years. You're actually going to get 24 months access to our AI agent, right? So for, post-launch for the next 2 years, it will be your always-on infrastructure as a capital raising strategist, as an investor relations specialist for the next 2 years. Also, even better, you're going to get a ticket to our Velocity conference. Now, we haven't publicly launched this yet, but we're doing a Velocity conference at the end of June. And that's going to be 2 days of 2 things. One, AI execution across your business. As you all know, I'm very passionate about AI. We're bringing in my favorite AI person, which is Ken Shaw. He's going to be showing everyone how to actually basically put AI across all execution, all the operations part of your business to actually execute everything at speed. And then I'll be doing day 2, which is all focused around how to utilize AI across your capital raise, and also more advanced stuff on the capital raising and capital engagement side. Also, you get access to my capital raising masterclass I'm going to be doing. And then also, even more important, as I said, with everyone having exits on their mind as far as for companies, we're going to give you access to our content library from the Business Exit Summit that we held at the end of last year. This was probably the best group of people that I've ever pulled together for a conference that we've got. And I'm talking from PE fund managers, I'm talking VC fund managers, I'm talking people that have had experience in over 2,000 exits. I had family offices, that had actually built and sold. They had a family office section when people have built and sold their businesses. So everything about how to actually sell your business for a high value was covered in that Exit Summit. So you'll get access to that library as part of that as well, right? And this is for 5,250, for 5,250, which you can spread across 4 or 6 months, right? I couldn't make it any easier for people to come on board and use it. So let alone the Capital HQ side, let alone accessing our investor ecosystem, let alone getting first access to our agent, let alone us actually hand-holding you in the beta testing for it. Also, all this other educational content as well. And for anyone that's been to our business conferences, you know that we absolutely smash it when it comes to delivering value. We have no pitches whatsoever at it. It's just 2 non-stop days of actual value, right? So total value, 36,995. I said all those have been sold at that individually. So it's for 5,250 plus GST once. Now, if you want to be more proactive, right? So there is other opportunities for you. So we do have a gold tier. So the gold tier is really straightforward. It's everything in the silver, but also if you want to do a dedicated email to our database for additional awareness about your opportunity, right? Then you can actually do that. Or if you want to feature at one of our WI conferences as well, then you can also do that as well. So you have the option of either featuring at one of our upcoming conferences. So we've got Capital 2026 in May, and then we've also got Venture and Capital, which we're going to be hosting at the end of July. Venture and Capital is going to be completely focused around life sciences, deep tech, renewables, all sort of innovation focused event. So that's that one. And Capital 2026 is really focused around funds, yield, property, real assets, and also a little sprinkling of innovation and listed companies as well, and a little bit of innovation, right? So the key part is that that's all covered. To give it, people always ask about the dedicated emails. We get an average open rate of 32% and an average click-through rate of 6% on the dedicated email. So that's an email going out to our entire database, just promoting your opportunity. From that, investors register interest, and then it's over to you to chat with investors directly. Now, if you want to be super proactive over the next sort of 3 to 6 months, then effectively the next offer is most relevant for you. It's our platinum offer, right? So if you're active raising now and you want to be very active, then effectively it's 19,750 once. As I said, you can spread that across 4 or 6 months with our third-party provider. everything in the silver, plus you get 2 times dedicated emails to the WI database, right, which is a value of 15K. Or you can have a conference, or you can convert one of those into featuring at one of our conferences. So you may choose to have a dedicated email and also feature at one of our conferences. But the biggest one is we actually do a promoted and hosted information session for you, like what we did for DIT yesterday. So with that, we basically send out 2 dedicated emails inviting people to your information session. We run the entire thing, and then you get the names of everyone that attends that session. And then likewise, we record it for you, and we send that to all the attendees as well. So total value is 63,995. That's 19,750 as part of our special offer if you'd like to take advantage of that. Likewise, everything else that's sort of included with it. So they're the different options if you'd like to participate. As I said, the key underlying aspect to this is that you do get lifetime access to the Capital, to Capital HQ. You get 2 years access to the Capital HQ agent when we launch. For the beta, as I said, we're actually manually doing it with you. You're going to be hand-holding through the process, right? And that's a key. So, as part of the onboarding experience, we will be creating a whole bunch of documents with you, as I outlined previously. So ultimately, just to let you know, so we've got limited spots for it. So we've got 21 for silver. I think we're now down to 11 spots for silver. There's 6 for gold. I think we're down for 4 for that, and then 3 for platinum. And effectively, the silver and gold will finish on March the 22nd, and then platinum will finish on March the 31st. Now, the reason for that is because we're actually hand-holding everyone through the onboarding process with the actual agent. We're actually doing it with you, and also the three monthly check-in process for you. I said it's not something that we can do more than 30 as part of it. And then likewise, we want to make sure that when we host the Capital HQ online showcase as well, we want to make sure that everyone that wants to be in that event is also ready and prepared for that as well. So that's our capacity constraints from an internal side. So that's the reasons why we're doing it like that. And effectively, again, and with the online showcase, just so you know, your presentation is actually pre-recorded. It's not done live. So we pre-record everything just so it's a seamless experience from investors, and we invite our global database to be in it. So we're going all out for companies that are participating as part of our special lifetime and our special second birthday offer. So if you're in the raise process or thinking about it, whether you're currently raising or thinking about it in the next sort of 3, 6, or 12 months, I say I've done my best to make sure that there's literally no reason why that if you're in this space, if you've got a company that's going to be raising money, I want to do everything possible to help you take advantage of it, because I know ultimately how much time we are going to save you, but also there's lots of investor engagement and connection opportunities as part of it. So to participate, there's 2 things. You can either reply lifetime to any of the emails that are sent through. It's all on my email address, is stevetorso@, and then we can organize the process for you from there. And you just have to let us know which level you're thinking about, whether it be silver, gold, or platinum. I'll send through a recap tomorrow with the details of all the different options, or you can just book a 15-minute call, right? I'll send you through I'll show you the details for that. So if you want to book a 15-minute call because you got questions around what, the different components that are in it, or anything, or relevance for you, or whatever it may be, I said, especially for the Capital HQ Silver, whether you're pre-seed, seed, I don't really care what stage you're at. It's relevant for you if you're thinking about raising money, right? So make sure you take advantage of it. So if you'd like to ask any questions, feel free to schedule a time, or tomorrow when I send out the recap email of everything that's included in it, then simply just reply with lifetime and which level you're thinking about, and then from there we'll obviously facilitate the onboarding and the setup of you with Capital HQ. So that is it from me. Now I'm just going to go to our chat box. All right, so just to be clear, so someone asked a question. Yeah, so with the base silver subscription, it does include access to our investor ecosystem. So all subscription levels include access to the Capital HQ investor ecosystem. So we've now got over 25,000. I think might be over 30,000 now in there. So everyone has access to our investor database inside Capital HQ as part of that offer. All right. Any other questions? By the way, it could be questions not just on the offer, but could be on the information I shared as well. All right. Well, on that note, I finished on time. It's very rare where I actually finish on time. So I finished 3 minutes early. Well, everyone, I'd like to say thank you very much for joining me. I said I'll send out a recap of the different offer details tomorrow morning. I said make sure you, if you're an advisor working with a portfolio company, encourage your portfolio company to take care of it. We've done everything possible to make it easy for you to get the most out of what we're building from a product perspective and to really simplify everyone's lives, whether it be you as a founder, you as an advisor, or the investors that you're going to be dealing with going forward. Ladies and gentlemen, have a good evening, or if you're in Croatia, have a good day, or if you're in Thailand, have a good afternoon. Thanks, everyone.